Reading the headlines, you'd think big banks have done away with fees. But what does this new trend in banking really mean for your wallet? Consumer reporter Steve Noviello is live in Dallas to sort it all out for us. Good morning, Steve.
Good morning to you. I will say this, many fees are gone, but not all of them. And let me be clear, this is really, truly a step in the right direction when it comes to consumer-friendly banking. Look, the idea that we were punishing people who could not afford to cover their own withdrawals with even bigger bills and penalties is just crazy. They don't have the money to pay it back, right? So one by one, banks are reducing or even eliminating fees for overdrawing your account or writing a bad check altogether. But as does these things go, there is a little bit more to the story.
So Steve, this all sounds good, especially the fact that some consumers may not be charged those overdraft fees. But really, let's talk about the fine print. What is it?
For sure. So it's going to vary from bank to bank. So in most cases, the NSF or non-sufficient fund fee has in fact been done away with by the bank. That does not mean that the retailer, the bill collector, the merchant that you tried to pay and didn't have enough money to won't continue to impose their own fees. So don't be surprised when you say, well, I thought fees were gone. Yes, the bank fee is gone, but the other side of the transaction may still ding you. As far as overdraft, we are seeing certainly a reduction. For example, Bank of America, they were charging you $35 for overdrawing your account. They'll now charge you $10, but they also have cut the number of times that you can overdraft from 4 to 2. Over at Chase, they've added a cushion. It was $5, it's now $50. In essence, you can overdraw your account up to $50 with no penalty, but if you overdraw more than that, you have until the end of the day to replenish your balance to -50, or you will face a fee. That timeline, by the way, will be extended to a grace period of 24 hours once they roll out the complete program later on this year.
Steve, banks, we know, have made a lot of money off of these fees. Should we expect to see other fees pop up to replace that revenue?
Yeah, it's an interesting question, right? Well, first off, let me say this. A lot of these accounts are not free to have, but every financial institution we spoke with said, please remind your viewers that there are all sorts of ways to get these fees waived. Things like setting up direct deposit or keeping a monthly minimum balance. As far as making up the money elsewhere, we asked the same question to the folks at Bank of America, and they told us this new, more transparent move toward financial wellness for their customers will cause their overdraft fee revenue to drop by 97%. That is hundreds of millions of dollars in loss each year. Now, to me, that is a lot of money, but here's what we've learned. To them, it's about 1% of their overall revenue each year. So what's going to happen is we're going to treat you nicer on the front end, we're going to build relationships, and then hopefully you'll come back to us for things like a mortgage or a HELOC or to finance your kids' college education. And that's when we will make money off of you by selling you those other products as opposed to feeing everybody to death on the front end.
Yeah, building the relationship sounds like the key phrase.
Correct.
Here. Yeah. Steve Noviello in Dallas, thank you so much. It's always good talking to you.